Into our trading idea for the day, we think as per yesterday, there's a significant move in terms of the KL Tech movement. So we start to re-highlighting a few of our previous core tech stock which are actually doing well, and we think there's decent chance for the uptrend to continue. Previously, we highlighted on 18 July Relio Stack, which the stock actually gained about 18.7%, short slightly to hit our second target at 2 ringgit 87 cent after we only peaked at 2 ringgit 83 cent. So despite the subsequent consolidation, we can tell that the ongoing trend remain, I would say, impeccable because the stock continued to trade above 200-day moving average, and those levels have been tested at least number of times for the past few months. So if you look the shape here, it could be a double bottom pattern as well. But in general, we think the uptrend set to continue. MSCI, they just enter the bullish territory again. RSI, if you look on the trend structure over here, briefly below the 50-point mark and long-term average line, now has heading up and create a new higher low structure. So trend in terms of momentum trend for the trends has turned much more positive. So because of that, we think there's decent chance for the ongoing momentum to lift the stock higher, seeking to next target at 2 ringgit 87 cent, which is our previous second target, now turning into our target as we introducing a new and higher target at 3 ringgit 25 cent. Meanwhile, the support colors level also be revised higher to 2 ringgit 47 cent. So we reiterate our technical buy for the stock. And then we have Frontcan. Frontcan is our technical buy as well on 29 May, later. But if you look on the trend structure remain positive, the stock is actually gained about 15.49%, rising above our first target, but still fell short to hit our second target. But instead, is still pretty much again about 15%. Now, the long period of consolidation saw the stock is actually building some sort of baseline again within the 200-day moving average. So what makes it interesting is the uptrend line that been set up since October last year is pretty much intact, and in fact it still retain its structure. So that means the emerging of interest for the past few weeks is actually continue to be supportive for the stock trend move. So because of that, we think there's decent chance for the uptrend to continue as we reiterate our technical buy with the new and high target at 3 ringgit 54 cent and 3 ringgit 80 cent, while the cut loss also has been revised higher to 3 ringgit and 9 cent. Last but not least, we have Tongguan Industry. So one of the reasons why we like the stock despite trading in the downtrend move. We think there's decent chance for the short-term recovery, particularly as the stock just staged a strong breakout move above the rectangle pattern yesterday. So the rectangle that was in, I think, since October, 3rd of October, has ended at the stock create some sort of breakout above the pattern neckline, and of course above the 45-day moving average over here. So this actually turned the short-term bias into more positive, and what makes it more interesting is you can see the noticeable higher trading volume for the past few weeks in tandem with what we call that positive reading in both RSI sharply gained, which means there is slightly what we call that bullish divergence here, which has been validated, and the might also turn much more positive. So technical rebound or short-term recovery is possible as we expect the stock to challenge in the next target at 2 ringgit and 2 ringgit 50 cent, while the cut loss will be below 1 ringgit 50 cent.